Hey everyone, welcome to this week's recap podcast for SNXweave. If you're a new listener, SNXweave is a grant-style initiative to improve communication and transparency across the synthetics ecosystem. We'll be giving quick weekly recaps of news and important updates from the Spartan Council and core contributors. On today's episode, we're going to be discussing the status of several SIPs and the governance election results in case you missed it. So let's get started. First off, for L2 shorting, Daniel says that he and Mark ran into a gas limit issue and that either Optimism increases the block size limit or they just wait for the upgrade at the end of October. Kane said it's unlikely that Optimism will do anything to modify the system given the upcoming regenesis, which means this SIP will likely be delayed for about a month. On a more positive note, Daniel says the Wrapper Factory SIP is progressing nicely and is almost at the point where it's ready for audit and a second round of reviews with the protocol engineers. Thief brought up that he would like to see a mechanism for this SIP to wind down wrappers. Or if we come up with a new wrapper, a mechanism that allows us to get people to move to the new one. Daniel will add a line to the SIP that allows negative burn fees. We should also see some progression from the future SIPs soon, as Jackson says they're working on capturing feedback and hoping to get the incentivized testnet up the second week of October. This week, Thief presented SIP 184 for dynamic exchange fees to the Council. This proposes a very helpful risk management and anti-front-running tool that will also enable lower base exchange fees. The first component of this SIP incorporates a dynamic fee that looks backwards. This means that it will look at how much the price actually moved from, say, the N-1 Oracle update to the current Oracle update. Then, if it is over some set threshold, the dynamic exchange fee will get boosted by that amount. The second component incorporates natural decay by looking at the previous dynamic fee update and applying some decay constant to reduce it for the next update. However, if there's another deviation that exceeds the threshold, it can be boosted again. Spreek asked if there's anything in place for a user to protect themselves from paying an unexpected additional fee, to which Afif responded saying it is deterministic for a current Oracle update and therefore will not change on you between updates. So at the moment that you submit your order, it's always deterministic. If approved, this SIP will initially be put on L2 to see how it does before considering if it would be worth putting on L1 as well. Kane added that this SIP is more easily implementable than SIP 181 for simulated liquidity, another SIP that aims to mitigate front-running risks and would be a quicker win for futures and spot on L2. The prioritization of the simulated liquidity SIP has therefore been moved down in favor of this dynamic exchange fees SIP being implemented first. Spreek agreed with doing this, but he emphasized that the only issue would be the increased market manipulation risk. However, most of the synths that are in danger of that manipulation have been deprecated, so it would just be a bit of a block getting some of those less liquid synths back on until we have SIP 181 up. Also presented this week was SIP 185, Jackson's Debt Shares SIP. Debt shares is a token mechanism to calculate a staker's percentage of total debt based on their number of shares. Stakers get debt shares tokens when they mint SUSD. This SIP will replace the current debt register system. During the presentation, Kane asked if having to check the debt shares balance for every staker is prohibitive. Jackson will look more into gas costs and get back to the Council on how much it will cost to do, for instance, 8,000 or 7,000 wallets on L1. Kane would like this information before putting the SIP to a vote. Michael asked if there's potential for other features to be added, such as the fungibility or the transferability of debt shares if they aren't ERC20 standard. He also asked if these assets can be used in other ways if they're just sitting in someone's wallet. Jackson explained that this is a bit out of scope for this SIP, as it mainly aims to help people migrate from L1 to L2. He said, however, that there is hope to most likely build a functionality that allows people to burn the debt shares and the equivalent amount of SNX in their wallet instead of burning all the debt on L1 to migrate to L2. He added that it opens up that functionality in a way, but it wouldn't be fungible where you could transfer some of your debt shares to another wallet because the cost of re-architecturing this on L1 for the existing system might not be worth it if we're moving to V3. Kane simplified everything by saying this SIP is intended to solve two things. One, to allow for the new liquidation mechanism to be implemented, and two, to help with the debt pool migration. This SIP will not be voted on this week, as Jackson will be doing a bit more feasibility on the migration and documenting the steps before it is voted on. Lastly, Andrew told the council that the Quenta Treasury DAO and interim council candidates lists are ready, so expect these positions to be announced imminently. And of course, in case you missed it, the election results are in. This epic Spartan Council members are Kane, Justin, Daniel, Michael, Feeve, Big Penny, Caleb, and Boyan. Your pioneering Treasury Council members are Rafa, Spartan Glory, Jordan, and Convex Monster. This epic's Grand Scout team will include Clem, Alexander, Rubber Duck, CT, and Mike. And lastly, your Ambassador DAO members for this epic are Millie, Andy, and Gunboats. Thank you to everyone who participated and voted. And that's it for today's updates. Be sure to check out our weekly blog post, share this podcast link, and let us know what you think and what you'd like to hear more about from SNXweave. Thanks for listening.